Hey guys, we'll get going in a second. If y'all got any questions, let me know. Give me a second. Get shareable link. Hey, can y'all hear me all right? Someone put in the comments if they can hear me or not. All good, cool. All right, we'll get going. So SPX right now trading at 68.60. In the pre-market prep, we had it at that's the full complex. That's not right. Give me a second. All right, here we go. All right, yeah, looking at SPX, right? So there's iron condor structure today, 80, 85, or sorry, 85.90, and then 55.50 to the downside, right? So those are pretty good containers for our junk and sailor zone. 85 to the upside, 50 to the downside. So in between is more or less, think of that as a chop zone. If we were to break free above one of those key pillars, right, then we want to see that our intraday volume kind of confirming that move. What does that mean? That means that we're seeing upside speculation, calls getting aggressive to the upside, or downside speculation, right, puts and calls getting aggressive to the downside. We would also see the market trend model. When I see that confirm right now, right, kind of clear indication that we are rolling over a little bit in the short term. Something we noted in the pre-market, we lost a short-term moving average ribbon. We're seeing some filtered tick selling here. So in the short term, right, seeing some weakness. In the longer term, we're still above upward trending moving average ribbon. So that is fine, right? Just simply could be a pullback in the context of a larger term uptrend. But, when we're below transition, we're below the railroad tracks, and we're seeing some intraday selling pressure. That's not a good thing on a short-term momentum basis. So, ideally we're above transition, trending higher on the market trend model as well. So want to be cognizant of that, especially in the short term here. So yeah, really want to get above 85. And then looking at the full complex levels, right? 65 is going to be that key level here as well. So where are we at right now? We're at 60. Yeah. So, Not ideal. I mean, had a heck of a run here. So, I mean, simply just a consolidation in this range, like from an overall picture, like this is not crazy action. Sure, like if you're zooming in on the 5-minute chart, like you gotta seem like super aggressive, but zooming out, like to the extent you believe in moving averages and all that good stuff, like below 20 or above 21, above 50, both trending higher, near all-time highs. So, from kind of a daily chart point of view, longer term point of view, everything looks fine, right? That kind of marries up with the market trend model, the longer term picture. But again, in the short term, could be pretty choppy. A little bit of a pullback here would not be crazy. So really just understanding what your time frame is and aligning to that time frame. And if you're trading swing trading daily time frame and you're zoomed in on the 5-minute chart, then it's probably going to be detrimental to your trading. So you want to make sure that you have what you're looking at aligned with the time frame that you're trading. If that's not clear, let me know. I can talk more about that. But a lot of things people argue about is because they're talking different time frames. So quickly just looking at the indexes, right? We're flirting with prior day lows here. We're below pre-market lows. IWM relatively strong here. It's holding at pre-market lows. Looking at Mag 7 stocks. So I mean, we have a lot of them that are flirting. So, Apple, middle of the range, Tesla below pre-market lows, Google below pre-market, prior day lows, Amazon near pre-market lows, Meta below pre-market lows, Palantir relatively strong. It's above pre-market highs, above prior day highs, Microsoft above prior day highs, above pre-market highs, NVIDIA chopping, kind of pre-market highs, but rejected at prior day high. So, all that, you need to be cognizant of that, especially what you're trading, right? Want to make sure. I mean, I like to look at pre-market prior day highs. They're kind of just good key levels of interest, along with the opening print as well. Then, right, bullish, want to be above opening print, want to be above the P trans level, right? That's our upside acceleration zone. Above pre-market highs, all that good stuff, right? This is what's moving higher, should continue to go higher. If it doesn't, that's key information for a directional thesis. So, pay attention to that. Let me know if you guys have any other questions on SPX0DT stuff. Looking at NetStat, right? This is a summary of our 3D surface models. Looking at the key pillars, right? 85, 90, those are going to be our key sensitivity points to the upside. Nothing different from the transition zones we already talked about. To the downside, 50 and then 25. Again, those levels are nothing different from what we've talked about already. So looking at Charm, right? It's a headwind right now. Meaning all else equal, right? Negative flows are going to be coming into the market via Charm. Then Vanna, right? Vanna has the potential to be constructive to the upside, right? But what we need to see a reduction in volatility and out of the money call speculation, right? You need both of that for a Vanna rally to persist throughout the session. What does that look like? That looks like call speculation moving higher. Right now it's trending lower. So, right, it's a very choppy consolidation pattern right now. So, not what you want to see if you're kind of bullish. If there's any more questions, let me know. Someone wants to look at Tesla. Looking at the chart real quick, though, just to get our bearings. Man, kind of a nasty move right now, but it's still above COTMP on an intraday basis. That's not all is lost here. Transition zone right at the top of its DEX transition zone at 455, but DEX transition zone is 450, so that's going to be a formative level overhead. I really want to see spot get above 450. Again, that's nice confluent, right? We can see in the pre-market, a ton of pin action with 450, was not able to overtake that, right? Got rejected multiple times, probably 3-4 times at P trans. So, right, I do not know how to pronounce your name. I'm sorry about that, but I'll call you Mesh. So Mesh, 450 is going to be a great kind of key level of reference for you there. You can see charm is, just the magnitude of charm overhead is pretty a lot greater than what we're seeing below. So bit of a headwind there. Really want to see 450 get overtaken. Let me know if y'all have any other questions right now. Kind of flirting with prior day lows. Again, we can see from Friday, kind of key level of reference that was made there. So yeah, I want to pay attention to that. Going back to our SPX game plan. Yeah, it's kind of right where the Iron Condor starts as well. So little confluence there. UNH. Yes, looking at UNH. Want to see it get above 330 right now. That's the top of its transition zone. There's a little note up here that's messing with the GEX algo. Technically, it's right. But, just kind of from, kind of an artistic point of view, as opposed to just purely math point of view, we can see 330 is really a good kind of top of P trans for us to be cognizant of. So I want to be cognizant of that level. Again, overhead, a lot of charm to contend with on a full complex point of view relative to the magnitude below us. Above us, you can visually see a lot greater up there. So above 330, you want to be getting above, 340 ultimately. Going back to UNH. Yeah, it's breaking down too. Like it's below prior day lows, so that's not constructive. Yeah, UNH just doesn't look very good right now, to be honest with you. NVIDIA. Yeah, guys, just keep in mind, like that rally we just had was freaking quick and aggressive. So pullback consolidation, isn't crazy here. So yeah, it sucks if you got FOMO and you levered up into the top of the move, but that's just where you need to have some situational awareness and kind of understanding what's going on. Amazon, rejected right at its P-trans level. I'm looking at Google below N-trans. Yeah, so just not seeing really a ton to do right now from a swing trading point of view, seeing weakness, right? So even today's not the day to be entering swing positions, right? We're seeing weakness in the market on a short-term basis. So that's that. From SPX 0DT point of view, I don't know, bias has to be lower for the moment, right? Like if you're below, granted, not in the hole here, but seeing some kind of bounce, like we're below opening print, below pre-market lows. Now we're below prior day lows. So this doesn't scream bullish intraday. And if it does, let me know how you're arriving at that. But I'm also not necessarily trying to short the low of the day here. See if we can get some kind of bounce up the pre-market lows or opening print as a key level of reference to size risk against. And then from there, see if you can get further downside continuation. Can even use kind of 670 if you want to as there. So all things to think about. But with that, I need to roll. I need to run. I'll be in the Discord later. Maybe try and do another pre-market or kind of intraday session here on YouTube later. But yeah, that's kind of all we got for now. So hopefully that was helpful, valuable. And with that, we will talk to y'all later. So thank you for the time.